In this video, I'm going to tell you a very quick trick that would make many traders go from unprofitable to profitable overnight. And I know that sounds too good to be true, and that's because it kind of is. Many people won't like what I'm about to say, but it is the truth that I have found over my years of doing this, interviewing many different traders on my channel, becoming a profitable trader myself. I've done this for almost a decade, and I've studied many professional traders, had them on my show. So my answer here, I would just encourage you to listen with an open mind for a second, even if you don't like what you're hearing. Again, it's not a popular take, but I'm going to share with you a transparent way that you can go from unprofitable to profitable pretty quick, as long as you have a decent trading system that you've back tested thoroughly. A lot more traders would be profitable if they stopped going for 10% plus per month and started going for 2% per month. What many traders don't realize that they're doing is that they're putting ginormous asks on the market. What I mean by that is they're going for returns that they don't even realize are absolutely insane. 10% per month done on average for a couple years would make you like the richest person on planet Earth. There's a reason that's not what people are doing. 10% per month is not something that anyone, and again, before you conjure up a reason for why I'm wrong about this, I would ask you to consider this. Many traders that are professional in the industry have been able to put up proof, verifiable records that they make 2, 3, even 5% average monthly returns, meaning they might have a 10% up month and a 2% down month and a 3% up month, but average 2 to 5%. Those are like the best stats that I've seen actually proven on regulated brokerages. Nobody can produce 10+% on average per month over a large stretch of time, except for there's like 1 or 2 notable traders of all time who averaged close to about a 10% per month. The greatest of all time are around 10%. So my point is, the average everyday trader who's still getting used to this stuff, who's a couple years into their journey, is very unlikely to be able to produce 10% plus returns on average per month. That being said, the reason I want to illustrate that is not to tell you, oh, you can't do it and trading is pointless, and I'm not trying to be a naysayer, but I want to tell you that transparently because, again, many traders don't even realize that that's an unrealistic expectation to produce on average 10% plus returns. Why can't you? Well, the reason is because in order to make big returns in markets, which 10% on average per month is big returns. I mean, that compounded makes you like a multi-billionaire in a couple of years. Even starting from small accounts, that's a huge, huge return. It may not sound like it, but compounding that is incredible. So if we take a look at that, we say, okay, the stats are there, right? Professional traders don't even average 10%. The greatest of all time get close. And if you'd like more details on that, I actually did a video going through some of the most notable traders of history and their average annual returns. You can find that linked in the top right of the screen right now. Now, I said this is not a popular take because it's not flashy, and it's also annoying to people when they hear 2 to 5% per month when they only have a couple $100s that they're trading with. And I understand. In fact, that's what I'm going to get into next. We had some comments to respond to this. What about someone like me here? I like turning small accounts to something like a huge account, of course, bit by bit. Small lot sizes and good risk management. $50 to $1,000 in 3 weeks. What do you call this? And without sugarcoating it, I said, I would call that pure gambling and not sustainable. Again, not a popular take. People disagree with me all the time on this, but I'm asking you, before you disagree with me and say, no, you're wrong because this, and this, ask yourself. Don't prove it to me, prove it to yourself. Who has shown you multiple years of broker login statements on a real, live, regulated trading account, not a offshore sketchy brokerage, not a prop payout, live, real, regulated brokerage? Who has shown you track record results to give you an example of what you're looking to produce? If you don't have some kind of example to point to, this is all just, oh, I went to the casino with my buddy and he tripled his bankroll. Well, yeah, but he was gambling, he got lucky, right? That's not the same as somebody who has an edge, who produces overall slow and steady returns. Good trading is boring, slow, and steady. Rapidly growing small accounts is not a sustainable or predictable way to grow and often leads to blowing the account completely. Again, I hope that somebody who's listening to this, I know there's going to be people who ignore me. They don't want to hear this. They don't want to hear small accounts cannot get turned to big accounts rapidly on a consistent basis. Most likely, you're going to take your small amount of capital and turn it to zero and be worse off than you started. And I really don't want that for you. That's why I'm making this video. I'm not trying to be a naysayer or put you down or bum you out, because I remember in your shoes years ago when I did not have a large amount of capital, I hated this conversation. This was annoying to me. I was like, you're killing my dream right now. What I'm telling you and what I'm going to get to in just a second is the dream is not dead. As someone who has gone from having very little to scaling up what I'm doing into much larger capital bases, it is possible. It's just not going to be an easy road. I'll get to that in a second, but let's keep going through some of these replies. So if you see a clear entry with your own analysis and a trade with a good lot size with full knowledge of what you're doing, does that still count as gambling? And this is a fair question. Many people say, well, Nick, if you have a really good system and a really good setup, surely you can make more than 10% per month on average. And that may sound good in theory, but what I responded with this is I said, markets are highly uncertain. No amount of analysis can produce a guaranteed result, which is pretty much what you need if you're going to be leveraging your account heavily. You need a guaranteed result. If you don't have a good trade, coupled losses and the account's blown, right? And hence, so if you don't have certainty, and you never have a guaranteed outcome with the markets, there's always some level of uncertainty. Drawdowns, losing streaks, losses are inevitable. When you are employing significant leverage, any type of losing streak sends you back to the gulag. I mean, back to zero. This person came around and said, you're right, there's no guaranteed results. It's just part of the game. Again, the cool thing though, and before you get all dreary and sad about this, listen to me for a second. There's a light at the end of the tunnel. It's just not going to be an easy tunnel to get through, okay? I'll get to that just a second. Why set targets? I've always had a different opinion about setting targets for yourself as a trader. I'm more of the idea that you can only take what the market gives you. I just take trades once it aligns with my system and wait for the market to do its thing. Totally valid. I like this perspective, right? Let's not set these outrageous targets for ourselves, which again, 10% plus on average per month is an outrageous target. My opinion, however, in response to this is just that you should have at least some idea of what your target is on a broad spectrum. What I mean by that is the minimum target should be able to beat the S&P 500's average rate of return of about 8 to 10% per year. Because again, that's just passive investing. So otherwise, you might as well just passively invest in the S&P. Generating on average 2% is per month, right, is well worth the effort if you're properly funded / have capital. And again, that's the key thing. That's kind of a bummer for people who don't have trading capital. And I totally understand. At one point, I did not have the capital that I have today. So I understand that frustration. If you're properly funded or have capital, most people who have capital don't mind going for 2%. It's usually people who don't have capital yet who are frustrated by this concept. And I'm pointing out you have a capital problem, not any other problem. Like that's the major problem that you may have if you are really frustrated by hearing 2%, right? 2% should be a great return for you if you have good trading capital. If you don't, then you're going to gamble essentially. And that's why people, and this is why I'm so passionate about this subject, people who have small accounts just keep going broke because they want to grow accounts quickly. Meanwhile, people who have capital just compound it because they're trading on a much more stable basis. Slow and steady ultimately does win the race. And being the hare, being the rabbit, the classic children's story where it's the tortoise versus the hare. The hare runs off ahead of the tortoise and then falls asleep under the tree, and the turtle ends up winning. That's slow and steady traders who go for 2 to 5% per month. The run the race as fast as you can and end up blowing up, that's the traders who are trying to double and triple tiny accounts. It's not a popular take because most people don't have large capital as yours. This is a fair point. And again, I get this response a lot from people. They're like, yeah, easy for you to say. You have a bunch of capital already, Nick. You're gatekeeping, right? I get that response often. I promise that's not what I'm trying to do. I am trying to genuinely offer some value to the community and share with you some wisdom that I wish I had when I first got started, which is I once had a small account too. The truth is still the truth though. The market doesn't care how much capital you have. The market is ruthless. It's going to take whatever you give it. And if you're risking big, you're just asking. It's like putting your line in the water and a big fish is going to come grab the worm, right? It's really a dangerous thing to try and go for big leverage at any time. I'm really not a fan of using much leverage at all in general in my trading. And here's some more criticism. Imagine your whole trading account is $100. Sometimes I wonder if it's only trading that got you here. And this is where the light of the tunnel comes in, because look, I will be transparent with you guys as always. My trading capital did not come from only trading. I started a business. I started a YouTube channel. I used to work in software engineering for a number of years. So there were many other things that led to building up a trading account. And so this person says this, and I said, I'm 100% not just a trader, right? I'm also a YouTuber. I run a software business, and I use trading to scale up what I've been able to build through other means of income. That ultimately is the dream for me when it comes to trading. And eventually, well, I mean, I could do this today, but I don't want to. I like doing all these cool things that I do on YouTube and software engineering and stuff and the software business. I like doing all that stuff, so I keep doing it. But I could theoretically stop everything else and just trade, but that would be really boring. I like doing all the stuff that we do. So I said, I'm a YouTuber, run a software business. And this person said, that's why. Imagine your whole trading capital is $100. Tell that person to target 2% monthly. How will that person survive? And again, you should not be trading for survival with $100. There's absolutely no way. The math doesn't even make sense, right? You could have the best month in the world, right? Double the account, get super lucky, and you're still only made $100. That's not a sustainable way to live. So again, if the problem is capital, that's the problem, right? The problem is capital. It's not trading returns. If you're pressuring yourself to make 10% plus per month, it's no wonder you're blowing account after account. You're going way too hard for big returns in the market, which is very good at parting you with your returns pretty quick when it turns against you. I would tell that person, if someone had $100 and they're trying to target 10+%, and I'm here saying you should target 2%, 2 to 5, I'd tell that person they need to find new ways to build up their capital, and that trading is probably not worth their time. So I went to school for software engineering. I worked for some time before ultimately starting my YouTube channel, sharing my journey as a trader, which slowly started to take off. And ultimately I started a software business where we build tools for traders who want to study, economic trends and follow the commitment of traders data. We build all these visualization softwares like the Edge Finder. So point being, ultimately, I found new ways to build up trading capital. And this is not an exciting thing. It's basically, stick to your day job until you can move away from your day job. That's ultimately a piece of advice that I wish I would have heard sooner, right? Like, don't try and rush into full-time trading. It's going to be a painful journey, and it's going to put so much pressure on your trading. Percentages and markets, unfortunately, don't care about our account size. You're likely to have $0 if you try to rapidly grow a $100 account. And I genuinely stand by that. Don't do that to yourself. Don't put this pressure, I got to double and triple, and I got to feed my family with trading, right? That's a terrible, terrible approach. Trading should be a way to compound your wealth, not to feed your family this month. That's a terrible approach to trading. It's just not how the markets work. They don't yield something every single month for you. And if they're, it's not like a day job where you have some sort of consistent, predictable income. Trading is unpredictable. You might have 3 months that are rough, and then you might have 6 months that are great, and then you might have a month that's horrible. And it's a overall return. It's kind of like investing, right? Good trading is ultimately like investing. You're going to have returns, but they may take material amounts of time to actually turn into something significant. And this person then responds back, just keep your opinion to yourself. By the way, this is on my Twitter, so I share my opinions on my Twitter. I've followed you on YouTube almost 2 years now, and I appreciate your content, but the psychology of which traders should trade is only him to decide. Again, you can do whatever you want, but at the end of the day, I'm sharing my experience here. I've done this for a long time. I've spoken with a lot of professional traders. I have become a profitable trader myself. I'm hoping that people out there will at least take some of my experience and learn from it. You might not have to agree with everything I say, but at least listen to what I have to say with an open mind. There's people who disagree with me, and they have their fair points as well. But I do have some points here that I can't tell you how many emails I've gotten from traders who watch my channel or have joined our Discord or something, and they're like, I've blown everything. I've lost so much money trying to go for big returns in the market, and finally they're seeing results because they're going for slow and steady. Again, I started this video with a big hook, right? Gotta be basically, there's a overnight way to fix your trading for many traders, which is stop putting so much pressure on yourself to go for huge returns. It's really a big deal, and I wish more people would take that approach. The slow and steady is really, really a powerful game-changing approach to going from unprofitable to profitable for many people. A lot of people, that's the final thing. For me, it was the final thing. Once I learned small positions are the key, it changed everything for my trading, and I went from just losing money to over time building up trading capital and compounding those gains over and over, and then using other sources of income to scale up the capital. Again, if you're feeling pressured to go for high percentages because otherwise it's not worth it to you, you have a capital problem, not a trading skill problem. Another alternative route is to consider going the funding route. And this is something that I think a lot of traders can consider, but I only really recommend looking into funding programs if you're already a consistently profitable trader. Again, if you have a capital problem, but your skills in trading are sufficient, it may be worth exploring the world of funding. And today's video sponsor, DNA Funded, may be worth checking out. I've left a link in the description down below, and with DNA Funded, you can currently get a discount if you use code A1T20. That will get you 20% off any of their challenges. They have a 1 and 2 phase challenge. You can trade pretty much anything on this prop firm. And again, it's a great alternative for people who are looking to scale up their trading capital, but may not have the income source right now, but could potentially leverage other people's capital. But again, I just want to re-emphasize here, prop firms, funding programs, whatever, they're only really worth it to people who actually have trading skills. So if you do have those skills, check out DNA Funded using the link in the description down below. Thanks for watching.